Welcome everybody. Today is September 8th, 2024. It's Sunday, approximately 2:45 p.m. as I bring you this video. And we have a lot to talk about right now. And I've been warning you for weeks on end, as we were making those highs, that there were significant divergences and distributions in the marketplace, as well as distortions in the market. Today, I'm going to be very succinct and just go over the key metrics within my macroeconomic indicators, as well as doing a deep dive into SPY and the VIX. The title of my video is Bearish Stock Market Analysis. It can't get any more simpler than that. And we really need to talk. We are at a critical level, folks. But before we start, here's the disclaimer. Pause it, read it. If you agree with my disclaimer, please move forward. All right. Shameless plug on x.com/Galaxydoc Market. Please follow us. A lot of great intraday analysis, comments, news, and resources from what I think are reputable sources from around the stock market. All right. Fear and greed. All right, so last week as I made my video, we were in the greed sector, and how 1 week changes everything. We are now firmly into this fear level. Okay, I said, this is from my previous chart, that this greed is contrarian and people everywhere were bullish, judging by the way that people were telling me that I'm wrong, as well as that I'm just basically focusing on these things. I think I have given everybody a honest and factual based on historical evidence, as well as my own experience in the last 35 years of stock market trading, that the crash is coming. And we're at the precipice. And it's funny to say that because everybody thinks that the crash is already here, but we are finally developing into it. And I think this week, coming from September 9th to Friday the 13th, guys, pay attention to that. Friday the 13th, the powers that be that control the market are very numerological, folks. Friday the 13th, we're in one of the most bearish sequences of months. And we are at that level. We talked about Rosh Hashanah, sell on Rosh Hashanah, buy on Yom Kippur, and how that date is now occurring in October, and how last year's Rosh Hashanah to Yom Kippur was like a nothing burger. And so will they be using that same date? Last year's Rosh Hashanah was on September 12th. Okay, we'll do more videos on that later, but for brevity, because I feel like my 30-minute plus long videos, a lot of people get bored of that. And so I'm going to make it as quick as possible so that we get to the point. And then I'll do smaller segments of videos, just like my Dollar Tree, how it's doomed, that video. Go check it out if you haven't. There's still room to play on that, folks. It ain't done. If you didn't take part in that earnings analysis that I did and make money off of it, there's more downside coming. Please check that video out if you want to. All right, so let's get right into it. And I've talked about this ad nauseum about watching the JPY US peg. And right here is basically what I talked about from last week. This was where we were. And I said, hey, look, as the JPY US peg rises, the SPY, the SPX, should be moving down. Well, last week we had a rise, and so we're moving higher. Guess what happened? We got that big fat black candle. I think the dislocations in the all the lies and riggery that's been going on from the central banks with all the money printing, guys, I don't think the Fed is interested in controlling inflation. I think the Fed is always late to the party, but I think they do it on purpose. If you study the history of Fed and what they do, it follows the same rate cycle. And I'm going to go over it very briefly on this video. And if you want to look at that exact thing, go watch my video from last week and the previous week. Okay, I know there hasn't been a lot of views lately. It's probably because, I don't know. But go check it out. If you haven't seen that, it is very educational. So I said inversely related relationship can be further related problems on the yen carry trade. And I think that's where the big flashpoint is going to occur. Okay, so I want you to look at that relationship as the JPY US dollar. Okay, here's the symbol, especially if you're using stock charts, is inversely related. And oh boy, okay, if we start breaking above this level and start breaking here, we're gonna have a full-blown crash. Okay, so pay attention to that. Now, I talked about my Galaxy 4, and my Galaxy 4 are the four big horsemen of this tech market manipulation tools that the central bank uses to tell you to believe that the bull market is coming, soft landing is here, and Fed is somehow going to save the world with rate cuts. By the way, guys, Fed is cutting rates because there is a big recession headed our way. When they cut rates historically, again, go back to my videos on that, all right, you'll see what I mean, all right? For those of you wishing for that, now you just became exit liquidity last week. But my four horsemen are NVDA, Meta, Apple, and Tesla. And this is the chart from last week, right? This week, we have Tesla trying to make a breakout, and then it failed. Everything is selling off. And basically, this is the NVIDIA right here, okay, has basically been taking it on the chin. It is sitting right on that precipice. Below that is going to be all hell breaking loose, okay? And I've been warning you about NVIDIA and the semis and the AI-related tech names, okay? And this is what I wrote last week's video. And I'm just telling you right now, the other thing that you need to be paying attention to is the fact that the Dow Industrials and Transports are becoming more impulsive and steepening on the way down. That usually tells me that there is a crash coming right around the corner. Okay, now we talked about NVIDIA. This was last week when I talked about this. I said, hey, if we break this level, if we break this level right here, okay, all bad things are going to happen. We broke it, folks. And now we're sitting realistically at this 100 level, okay? And yeah, once we get below into the 90, 95s and start getting below this 90, there's just gaps galore. There's gaps right here. There's mini gaps. You know, gaps get filled during market corrections, and that is what's coming. Doesn't mean the market's going to go up in a straight line, but you have to be brave enough to be able to recognize what is going on, understand your pivot levels, and short those rips. Okay, not financial advice. You have to basically make that determination on your own. I'm just a messenger here. Okay, so this is the message that I put out about NVIDIA. This is what we got. All right. Now, you know, we took Avagio and we looked at Avagio, SMCI. All the techs related to semis and AI are being taken out to the woodshed. And so we talked about this also last week. I said SPX is lagging the equal weighted SPX. Usually it's the other way around. And this is the regular, and this is the basically the equal weighted. Okay, I said, hey, look, they're breaking out while the regular SPY, SPX, is lagging. Well, what that was signaling to you was that the laggards were being bought off as they were selling off the main ones like NVIDIA, Apple, Tesla, Meta, all the big leaders. Now it's catching up, right? And the leaders are steepening down. And you know what the crazy part is? We really have not started selling off yet, okay? We don't really get to see a major sell-off until we get below this 6,600. In our case, for the regular, when we get down below 5,500 and really in the 5,000, that's when the real shit show starts to begin, okay? Look at all this space down into the next major support and pivot level, all right? If you don't think that could happen in a quick fashion, I don't know what to tell you. But, okay, I'm not, I don't know what to tell you. All right. For those of you that are going to be buying the dips, okay, you need to do it as a scalp, okay, or you just short these rips and figure out what the levels are, okay. But regardless, this is not good. What's happening? I talked about this monthly uptrend line last week. This is last week's video. I said monthly uptrend line is typically signals the start of a bear market. So we have not really signaled a bear market top yet as we're selling off. That's the crazy part, folks. We have at least to the 578 to 585 to reach that. And I believe that comes after the elections. But we're going to have a lot of expanding volatility like I've been talking about, right? And so what do we have in terms of this week? And this is why I think there's a bigger sell-off coming ahead of the FOMC and all through October until the elections. And I think we're going to get a rip-roaring rally that will tag this line probably sometime at the end of January. But we'll talk more about that later. This is telling you that the sell-off is going to start. Okay, that red candle basically is, I gave two scenarios. I think the second scenario in which we're going to sell off like a mofo down into this region into 460 on the SPY, 486 to 464 level. I've been talking about that ad nauseum, and I think that's what's going to be happening. It's not going to go down in a straight line, folks, but you have to be brave enough to step in and short those major rips as it stalls. We have our levels, and that's what we need to do. Okay, stock market is not a game where you basically see what's in front of you. You have to anticipate these moves, and that's what I'm providing for you. And really quickly, and I said, hey, look, you know, when Fed pivots, there's going to be a sell-off. Is it any different this time? No, it's not. We have record big box retailer bankruptcy. WF is sitting there telling you to your face that there's going to be shock events coming between now and November elections. Japanese yen crisis. I just showed you that JPY US dollar chart versus SPY. What more do I need to show you? The bank solvency issues is not over. If you haven't looked at XLF, which I'm not covering on this video, they are beginning to sell off because they have never been secure. The banks are insolvent. Nothing was solved since this 2007 financial crisis, folks. Okay, they're just lying to you. Okay. Fed is always late to the game. This is another slide from last week, but I have to show it to you. The Fed pivot analysis from 2000, 2007, 2019.com analysis. All of these, Fed starts cutting. It leads to at least a 52, 53% decline in about a month or so. Okay, and we are 10 times worse than where we used to be. So just as an aside, and if you want a further detailed analysis, go look at my last video from last week and the previous week to that. But this is what I've been saying is that here comes the rate cuts. Boom, boom, boom. You know, there's beginning to cut rates. A lot of them in panic. And what happens is when the rate cuts come, market celebrates for a couple of days and then it sells off. And then Fed just jumps in and they panic cut. And this is all planned, folks, and which led to the Great Recession. And then we just fell straight down. Okay, we're not here yet. This is kind of where I think we are. We're basically beginning to realize, oh crap, Fed doesn't know what they're doing, or they're doing it on purpose. You be the judge. But you can pause it and read all of this, or go watch my previous video. I know it's long, but I recommend that you watch it. Okay, you got to keep an eye on this, right? We talked about this, right? We talked about the Japan surprise fold that led to this. And so this is again in the video 2 weeks ago. Okay, and I already showed you the updated chart of this. But think about where we were 2 weeks ago when we were basically beginning to bounce. Everyone said, oh, no, that was everything's under control. And then the following week, we got another bounce up. All that was a dead cat bounce and a trap for all you diehard retail people. Okay, don't be exit liquidity. All right, so getting to the point where you really want to look at, and this is the analysis that we're going to do, is SPY and ES at critical levels. And what are the levels that we're looking for? And I think that's why you're here. So I'm just going to give you what you want instead of talking about a lot of things that you may not want to listen. But if you want details of it, go watch my last week's video and watch my previous couple weeks of video. Go watch them all. They're 30 minutes long, but you might learn something from it. All right, diving right into the SPY analysis. This is the daily chart. And so this is where we are, folks. We're right here. Okay, sitting on this volatility target zone that I've made. I think we're going to hit 530, 581. There may be a little bounce trying to retest this breakdown candle. Maybe it gets halfway up there and then start breaking back down. Or we start selling off. And I'm going to tell you, I don't know when this video is going to get out, but sometime tonight, it's going to be a very big tell what's going to happen with the Japanese market, as well as that are we going to actually have a quick plunge. I don't think it'd be too far-fetched to start seeing plunge down into the 520 level, into the 507. Okay, pause and watch all of these levels, these boxes that I've drawn for you, and we have the RSI that is basically continuously being negatively divergent. Now it's a directional, right? Big fat candle, right? We may start getting gap downs because that's why I'm saying watch the ES market. MACD is signaled its downward direction. CCI is coming in steeper directionally. Stochastics is a shit show. PPO ADX is showing bearish formation, and there's more to form here. And we broke down on the accumulation distribution. There's been a massive sell-off coming in here. All right. And then, of course, looking at this ATR level, right? This ATR level basically is showing you that, remember, I use this very differently. Yes, I look for average true range on a daily move, but as it breaks through this downtrend line, this is saying that a new trend is developing to the downside. Okay, it's a directional indicator. Let's look what happens on the weekly. Weekly is the same thing. We continue to see weakness in the RSI. We're finding support right off of this 20-week simple moving average and this uptrend line. If we break this week, we may finish right into this 520 to 515 this week, and then followed by, if there's a major conniption, with a blink of an eye, we could be down into the 495 to 490 level by this Friday, folks. I'm not trying to scare you. It doesn't mean we're not going to bounce, but you gotta, again, I've been saying it like a broken record, you gotta short these bounces, okay? Everything is coming down on the MACD. Everything is directional. What more do I need to tell you? If PPO ADX is downward direction, this is a bearish formation. When you compare that, this is my PPO ADX crush indicator. All right, let's go to VIX. VIX, I've been warning you folks, we have VIX 25 calls expiring in September 28th. All right, and I said these levels, see these blue arrows? Go watch my previous videos because I think you need to if you haven't. And we are basically at the precipice of breaking out. This is a strong resistance that has formed up here, but if we break out, because it's not going to take much, we're going to break out above this 65 level. And if you don't believe me, talk to me when Rosh Hashanah in earnest has started on October 12th to see where this VIX is going to be. All right? So that's kind of what I have for now. I wanted to quickly look at, for you ES traders, this week, as the market opens in a few hours, this level is critical. If basically that breaks, we can drop all the way below this 5,300. Look at all these gaps, unfinished business all the way down into the 5,100. Really, the target is going to be just above this 5,000 level. And if this red downtrending line right here, and I'm going to just show you right here, if that breaks, all hell's going to break loose, okay? So pause this and watch this level, okay, on the ES. I like SPY better because it gives me better gaps. Okay, that's all. Okay, real quick, consumer demand destruction continues, right? We have been showing that significantly with the Dollar Tree and everything else, Dollar General, everything that I've been telling you, and there's more to come, folks, all right? Dollar Tree. Again, watch my video on Dollar Tree being doomed. I put 2 videos out last week. Okay? For those of you that are telling me that recession is Fed's going to fix it, they never fix anything. They cause the recessions. All right, so here's what I said last week. Will we fail at near all-time highs in the SPY gap? If we get above the gap, markets are targeting that long-term bullish trend line, which historically signals bull market upon hitting it. We know that's not going to be the case. I think we're going to get a sell-off. And then after the election, after Thanksgiving, I think we're going to have a really nice rip-your-face-off rally to that upper trend level. Everyone's going to say the new bull market has started and everything has been fixed. And then the real crash begins probably in February of next year, maybe end of February. MSI has been divergent, but I think it has fixed itself because of all of the magnificent fours, or what I call galaxy fours, have been taking it on the chin. I think they basically have diverted. So now we have the MSI being directional. Okay, watch that JPYUSD. And here's basically what you want to focus on this week, right? Doesn't mean we're going to go do this in a straight line, But here's the key levels, folks. Positive read it. Okay, 524.89, 535.81 is the line in the sand. And then below that, we get 524.511. And all hell breaks loose below 501.33. It is possible, folks. Volatility will expand. Keep note of the Fed pivots. Okay, and cutting cycle coincides with market crash and sell-off. Sell on Rosh Hashanah, buy on Yom Kippur is in full force. All right, thank you so much for watching. Follow me at Galaxydoc Market. Like us, share us, and above all, comment and subscribe, please. We're picking up. We're at 1,200 subscribers. Super excited about that. Okay, if you want to learn about doing business with me, or want to learn about joining my community, or if you want some consultation with me, email me at coachbrandon@protonmail.com. All right. Otherwise, let's get some alpha. All right. Things are going to get pretty violent here. Okay. All right. Bye-bye.